Awesome. Just waiting for Patrick to get here, giving him a couple more minutes. Probably play one more tune or so to get us into the mood before we get our guest here. Make sure Andrew can connect too. I don't know what's going on with that. That Miami Wi-Fi is always playing games out here. But let's see what we got here. It's cooking up some tunes. Nice little lo-fi maybe. What's up, Patrick? How's it going, man? How's your Thursday coming so far?
How's it going? It's going well. I had another space last hour, and before that, I was doing some dog training.
Really? What kind of dog you have? You have a little puppy? You're training it to be an adult?
I've got it's called a Belgian Malinois.
Wow.
They call them, they're also called Belgian Shepherds. They're sometimes called German Shepherds on caffeine because they're like German Shepherds, but higher energy and more athletic. So, yeah, I have a professional that I bring her to once a week that helps out.
I love that. I'm not at the stage in crypto yet where I can get a Belgian Malinois, but it's good to have goals in these days. So I appreciate you giving me one to add to the list. If you don't, go ahead, Andrew. Sorry.
Yeah, no, Patrick. Good morning. Good morning. I was gonna say I don't have a dog, but I do have the dog in me.
There you go. We all.
Well, that's what really matters, right?
I
Yeah,
love that.
funny enough, I actually was able to get the Belgian from a shelter in Philadelphia as a puppy, because usually they're like $5,000-$10,000, but I got it from a shelter. Someone left it there.
Wow. Well, adoption, man, that's great too. That's just the kind of person that you are. Building the crypto space and helping those puppies out there. Give Patrick a follow for sure, folks. Patrick, if you wouldn't mind, just give people a little background on like who you are, like what you do, and then we can dive right into these the questions that we have prepared for you.
Absolutely. So I guess if you want to put it in two words, I hate labels, but I would say that I'm a DeFi analyst. I have the Dynamo DeFi YouTube channel and newsletter that I started. And yeah, real brief. I've been investing personally in crypto since late 2017. Been publicly sharing my analysis / tutorials, educational content for just over 2 years now. I started making it in 2021 actually because I was trying to get my dad into into yield farming, and I couldn't find any guides online for something that wanted him to do. So I said, okay, I'll post one. And you know how life happens. Fast forward a couple of years, I've got fortunate to have tens of thousands of people that look at my tutorials and analysis and all that. I do a lot of focus on chain metrics, on chain analysis, as well as anything that you can do on chain. But very much my focus is not on the technical analysis trading so much as it is on navigating the on chain ecosystem.
100%. You're a true Chad when you can replicate audiences on multiple platforms. So shout out to you, sir. Onboarding dad into yield farming. That's kind of badass as well. I don't know how many people are doing that. That just kind of shows you're a little ahead of the curve, which is awesome. I guess we'll just dive right into the questions here. There's so much happening in the space. We could probably talk about Ripple a little bit later. That news broke a little earlier. But the first question we have for you is, in what ways does DeFi promote financial innovation and disrupt traditional financial intermediaries?
That's a really good one, and truthfully, because my background isn't really TradFi. I did some stuff in corporate finance, so there might be people who are better positioned to speak to it. But I think there's two things that jump out to me as far as how it disrupts. First is that it takes out the middleman. So there's a lot of things, right, where you in the past you might have a whole apparatus that has to do with approving loans and dispensing it and keeping track of it and all of that. Well, with smart contracts, you can get rid of a lot of those middlemen. And I think part of the reason we haven't seen that more is that smart contracts are just starting to be battle tested, right? Where we're probably just starting to get to a point where if you had serious money, you'd be willing to trust it to some of these smart contracts. But in time, that'll come, especially as you're able to integrate more automation through AI and those sorts of things. So the first thing is it disrupts the middleman aspect of it. The second thing is it allows experimentation by really anyone who knows or learns how to code with creating financial products, and that could be financial products in a very broad sense. Could be even creating your own currency, as was originally the case, or it could be creating a new type of exchange, a new way of potentially bundling options. I mean, you get really into the weeds, but basically, you already have people creating financial products that maybe don't really exist or only exist in a limited sense outside the world of crypto. And I think that as the ecosystem gets more built out, you have more real economic activity happening, then you're going to see this flourishing ecosystem. I almost compare it to crypto is to traditional financial world what social media was to traditional media, where you still have some traditional media companies exist, right? You still have the New York Times has subscribers and they have a social media presence. But at the same time, you also have Mr. Beast, right? You also have citizen reporters. You also have millions of other people who have started media companies that range from, they have 500 followers that they share news in their local area to up to people who have multi-billion-dollar companies that they've grown through social media. And so I think that's how I imagine crypto evolving over time, where before crypto, there's really no way you could, well, there's not no way, but it would have been almost impossible to start some sort of financial company out of your basement. Whereas now you can start a financial firm creating some sort of never before seen primitive out of your basement.
Dang, that's definitely a good prediction there, I think, and also kind of leading into the next question. You talked about disrupting the middlemen. What is the most significant impact DeFi has had on TradFi? Do you see them coexisting, or they inevitably merge into one? Usually middlemen don't like being disrupted. So do you kind of see them playing nice with this new industry, or is it probably not going to mesh well?
Well, I think we've started to see the interest already from TradFi, right? I mean, just especially with the recent ETF filings and all of that, and not to mention just long-standing investments that some of these firms have had in for example, Consensus or various wallets or infrastructure providers, all that. So I don't think that it's going to completely drive them out of business. But like I made the comparison with media before, I'll go back to that. It may take enough of their business that I don't think they're all going to make it, right? I mean, it's, for example, what's the turnaround from now to when crypto could conceivably replace a checking account for some people? And say, maybe the US, it would take a little bit longer than other parts of the world because the banking system, not for everybody, for most people, I think the banking system in the US works relatively well. There's actually, not to go on too much of a tangent, but one of the DeFi Llama developers, ZeroX Kofi, had a great post recently where he said basically the banking system in the United States and a lot of Western countries works well enough that it's tougher to make the case for why crypto can add value in the short term, whereas in other places where the banking system does not work well, it's much easier to make that case. But anyways, point being, what's the turnaround time between when crypto could replace a checking account? I mean, some people conceivably it already could, but probably it's easy to imagine a scenario where within a couple years, say under 5 years, it could replace a checking account if you wanted it to. What's the turnaround time between when crypto can replace the functionality of an investment bank helping with multi-billion-dollar acquisitions. If ever, I imagine it would take much longer, right? If it ever happens, you basically have to have the entire financial system running on crypto rails for that to happen. So then the point being, okay, so J.P. Morgan is not realistically in the near future going to be driven out of business by crypto. I mean, I'd love for that to be wrong, right? Because I'm working full time in the industry, but realistically, that's not going to happen. But just like you saw social media really hammer these some of these local papers, because suddenly you don't necessarily have as much of a need for a local paper, because you could have someone with a Twitter account and 2,000 followers performing some of the same functions. I imagine that crypto could disrupt some of these smaller local institutions much sooner, which is kind of a shame, because they're the ones that potentially don't deserve to be disrupted as much. But that's the mental framework that I have right now. Although I will say the flip side is, when I was applying for a bank account for Dynamo DeFi, I decided to try to go with a local bank, and they turned me down, and then Bank of America accepted. So maybe the local banks aren't all great.
Yeah, I definitely think you're spot on with America is probably going to be, last to embrace the crypto, in industry, right? Because like they don't really need to. People don't have the pressure to go look at that when the dollar is seemingly fine to them, even though we all know the truth about that. But anyways, what about this? Do you see anything, everything being on chain as a privacy concern down the road? Like, are you kind of worried about the freedom to transact or the pushing of CBDCs that we're seeing from the government right now?
Yeah, well, that's especially a big topic of conversation this week with Arkham, right? And by the way, it's actually a useful app, so it's kind of a shame that there's so much controversy, partially brought on by themselves. But it is actually a very good app. In my ebook about on-chain analysis, I talk about how to use Arkham. But for people who don't know that situation, basically they're offering tokens in exchange for people labeling addresses on chain. But it comes to the core question of, if something's on chain, does that mean that it's publicly out there, and so you don't deserve any privacy anymore? And whether you deserve privacy or not, is it a risk to have things on chain? And I've always been of the perspective that we would get towards some sort of privacy at some point, and I still think that we need that for realistic mass adoption, at least in payments. I mean, maybe you think that payments, I'm not saying you specifically, maybe someone thinks that payments won't happen. But even if you just, for example, have tokenized membership cards at stores, right, or you have rewards points are tokenized, which I think is an interesting use case, then when you go to a coffee shop down the street and you use your wallet to accumulate your rewards points, do you want the person working there to know your net worth and how liquid it is and how much you have? Absolutely not, right? That's a nightmare. Not just for privacy, but also for safety, right? I don't know where people live. I live in Philadelphia, fully doxxed. I mean, people get robbed for far less than the net worth that a lot of people in this industry have in their crypto wallets. So I think you need to have some sort of ability to have privacy. I don't know exactly what that looks like. Probably some sort of permission privacy type thing, maybe something involving ZK proofs, but I think you need that at some point. I mean, I know that in a lot of countries, when people store money in stable coins, they send it to each other directly from exchanges. Not an ideal solution, but that is one solution too.
Yeah, definitely privacy on chain is something that's going to be an issue, I think, and something that definitely keeps me up at night a little bit, because obviously, like you were saying, having everybody know your net worth is not the most ideal scenario. But I guess pivoting a little bit here, you're kind of an expert in this field. How useful is on-chain analysis? Is this something everyone in crypto should be comfortable with understanding? Does technical analysis work, or is it kind of astrology for crypto bros? Like, what are your kind of thoughts on that?
Yeah, so first we'll do on-chain analysis, then talk about TA. On-chain analysis, one part of my thesis and the reason my content revolves around that, and especially on-chain metrics, is that I think that eventually the industry is going to shift more towards that from charts. Charts will always play a role, but I think they'll shift more towards fundamental analysis from on-chain. I think everyone should be able to read a blockchain scanner, blockchain explorer, at least, right? If you're doing things on Ethereum, and I'm not saying your average person long term, right? Once we have millions of people, but if you're in crypto now, you're investing on Uniswap or NFTs, or you're using DeFi protocols to yield farm, you ought to be able to read a blockchain explorer, just because it's going to make you much more self-sufficient and less dependent on what people tell you. As far as technical analysis, I know a lot of people say it's like astrology for men or astrology for crypto bros or something. The problem is that I know people who are successful full-time traders that use technical analysis. So to me, that proves that there has to be some value to it, because these people, I know for a fact, are making money using it. I think potentially it's not 0 or 1. There's some of the more insane models or drawings on charts you see people do that I don't know about those. But in terms of looking at, for example, long-term support levels, looking at general support levels when things are getting overbought, oversold, I know people who make a living buying and selling based on those things. So I have to think that there's something there.
100%, 100%. I definitely think there's something there. I think also, like anything, you can get lost in the charts, man. Like you said, like those pretty lines, you can draw pictures on them. People get a little crazy sometimes, like you were saying, but definitely hear that. And again, we talked about this in the intro, but you've grown a crypto DeFi audience on YouTube as well as Twitter. What have been the main differences between the crypto communities on Twitter and YouTube, and why should crypto natives be on both platforms? Is there a lot of alpha on YouTube that we should be checking out?
Well, I'll say in the bear market especially, it's much more Twitter heavy. The interesting thing is I'm much larger on Twitter now, but I really started or grew on YouTube first, where I think when I first hit 10,000 on YouTube, I only had around 1,000 followers on Twitter. And there's actually, for me, I now have 50K on Twitter and 21K on YouTube, so I'm larger here. But there are, for example, there's people with 1 million YouTube subscribers that make content about crypto that have virtually no Twitter presence. I mean, there's one I can think of who I think has maybe 9,000 followers. There's others that have a couple tens of thousands, but rarely tweet. So it's important because it actually shows you that there's this whole world of crypto out there. And just to give you one example, if you look on YouTube, and TikTok actually also has large crypto accounts, although I think the ratio of signal to noise, there's a lot more noise on TikTok. But if you look at either of those platforms and what people are talking about, what are their favorite coins? I mean, Bitcoin is the obvious one, but you actually see huge communities for XRP, Algo, and ADA. I would say are probably the big ones, right? Like if you want to make crypto content really go viral on TikTok, and I don't have a TikTok, but if you want to, and I know people who have done this successfully, you talk about XRP, you talk about Algo, you talk about ADA, and that's important to understand, because you see people on Twitter, for example, say, I don't understand why this coin is still top 10. I don't understand why this coin has this market cap. And it's like, okay, well, maybe it's not useful for the things that you think it is. You want to use it for, because you're using DeFi and NFTs and all that. But if you actually look at the presence in terms of people who would tell their friends that they're interested in crypto, tell their friends they're invested in crypto, there's actually huge numbers of people who, for whatever reason, have decided, okay, they like XRP, they like Algo, and then they're interested in content on that. But if you were to pay attention a little bit once in a while to, for example, what does well on YouTube, you would be able to understand that. And my theory on why that is YouTube in general is a much more casual audience, I would say, than Twitter, right? Most of those people, their identity doesn't revolve around crypto. If they're watching crypto YouTube channels, it's maybe something they're interested in a little, something they invest in, but they're not obsessed with. Their identity doesn't revolve around it. And I'm talking about the people who watch the videos, right? Not the people who are working full time to make the videos. And I think part of the reason why the coins that are popular there is that generally it goes one of two ways. You have people who watch those videos, they really like the meme coins, and that's because that's just very pure, okay, I'm buying this because I want the price to go up, right? There's no illusion that it's the future of anything, right? They want the price to go up. Or they hear about FTX, they hear about scammers in crypto, they hear about government regulation, and they look for coins that are pitching themselves as the compliant, institutionally backed solution. And I think that explains part of why you have this dichotomy where you have, for example, Shiba Inu and Dogecoin popular on YouTube, and then you also have XRP and Algorand popular. So that's one thing that's important. And by the way, my stuff I cover is very similar on YouTube and Twitter. The problem is that during the bear market, there's actually not a huge audience for DeFi type things because there's not as many people who are casually interested on chain. The other thing that you learn by watching YouTube content, and for me by making it, is that a lot of people even people who are into crypto are much less advanced than people on Twitter would think. And by that I mean maybe they've been investing in crypto for years, but they've never actually used a wallet, right? They've never made an on-chain transaction. Or maybe they have only used a hot wallet, they don't have a cold wallet, right? Everyone here seems to assume, because you ought to try to have your funds in a cold wallet if you can, or a hardware wallet, excuse me. But maybe there's a lot of people who just use MetaMask. Probably most people who have used crypto in some form are just using MetaMask. Or it opens your eyes to how freaking difficult bridging is between chains, right? I stopped making videos on bridges. You know why? Because every time I do, I get dozens of DMs from people who are like, "Oh, it's what happened? It's delayed. Where are my funds? I can't figure this out," and it's just not worth the hassle, to be honest, because so many people have trouble with it, and so it really opens your eyes to the fact that to have 1 million people onboarded, there's a lot of room that has to go, and also the good news is it shows you that there's a lot of incremental users and buyers.
Yeah, definitely a good take. I mean, I've enjoyed crypto YouTube a lot. I definitely have noticed that the activity is way down, but shout out to the content creators that are still creating during the bear market. You guys are badass, and we appreciate that education. You mentioned XRP too. I mean, I'm pretty sure it's like over 900 days since the initial case for the XRP was started, and we had a ruling today, that, they don't really think it's going to be a security maybe. So what are your kind of thoughts on that? I mean, that's kind of what all crypto Twitter is on about right now. Are we overreacting? But or is this kind of a precedent where it's like, hey, if they can't even prove XRP as a security, maybe the other coins are going to be safe?
Yeah, I mean, it's of course much better than the alternative, especially just given things that have some of the regulatory concerns that have happened recently. It's I think really encouraging for a lot of people. I don't know how much to read into whether this means that they're going to win, or the crypto-based companies will win all the other cases. I think there probably are some crypto tokens that could be thought of as securities. But the fact that XRP won is obviously a really good sign that, okay, it's not just going to be BTC, right? I mean, I've never been of the opinion that crypto will stop existing in the US, but my concern was, okay, well, what if it's just BTC, right? They rule that you can basically buy BTC and that's it, or buy BTC and ETH and then nothing else can be listed here. This shows to me, okay, that at a minimum we will have a larger ecosystem. And to that point, I mean, maybe the actual use case isn't as clear here as it would be in some places that don't have developed banking systems. I'm in the U.S., of course. I don't know if you are. It sounds like you are, or you have lived here at some point, Alan. But I'm optimistic. Where I think if you look at the U.S.'s approach to innovation in tech in the past. I know there's a lot of concerns that they've been a little bit harsher on crypto than on other things, but I think there's still a realistic chance that we get that total crypto victory in the U.S. I mean, if you look at actual laws and regulations right now, for example, I forget the exact law, but some of the things that have been passed in Europe, and I'm not talking about the suits, but like actual laws that have passed, they seem to me to be as harsh or harsher than anything that's actually been put into law in the U.S.
Yeah, I mean, just talking about crypto in the U.S. because I am a U.S. citizen. I look over my shoulder every day for holding my 0.0001 Bitcoin, where then I'm going to be dragged into a van for holding crypto. But I continue to survive. I kind of want to ask you, the U.S. national debt is kind of the elephant in the room. And how much longer can we keep borrowing and spending? And will the debt be one of the catalysts to force the old financial system into the digital age?
Ooh, that's a good question. I mean, I guess it's two separate things, right? Because even if there was no crypto, the debt would have to spiral, would have to cause some sort of death spiral. I'm going to break into crypto lingo, right? But it cause some sort of death spiral eventually, where they're printing money to pay off the debt, or they're taking on more debt to pay off the existing debt, and then it's just putting more money into circulation, and it's spiraling out of control. And I mean, your guess is as good as mine as how long it could last, right? I would have thought that things would have started to unravel by now, and maybe they are behind the scenes. But if you look at, for example, the current inflation numbers, that's not happening. I feel pretty strong that in the next couple of years, things will have to correct one way or another, though. Will that be the catalyst for bringing digital money into the mainstream? I think it could be a catalyst for price doing well. I think the catalyst for bringing digital money into the mainstream is going to have more to do with the technology actually offering something useful. I guess in that case, you can imagine where it offers you an escape hatch from a rapidly depreciating dollar. But I don't know. I mean, the thing I have a tough time with, I mean, I love even though he lost the bet, I love Balaji's theory that everyone's going to escape into Bitcoin. But I also feel like if you had a situation where the U.S. debt got completely out of control and we spiraled into hyperinflation, then it's tough to imagine a situation where your DeFi, altcoin is doing anything beyond performing catastrophically, right? If you have that sort of complete economic collapse, maybe you can make a case that Bitcoin's different because it's also a store of value. But I think if you're talking about people actually using the technology and having a robust ecosystem, it's going to come more from tech and day-to-day use cases than it is from any sort of economic events like that.
Yeah, I also did like Balaji's theory on that. $1 million Bitcoin, maybe we'll see it in our life one day. And I also, just continue this conversation, I want to ask you about bricks. Backed by gold, those fuckers stole our playbook. Was leaving the gold standard the biggest mistake that the United States made, do you think, in this country's history? Or is it one of them, would you say?
Well, there's a really interesting website. It's actually made by a couple of Bitcoiners. It's called "What the Hell Happened in 1972." Have you seen that?
I haven't, but I ask that question every single day, bro.
Yeah. Was it 1972 or 1970? Oh, what the hell happened? What WTF happened in 1971? That's the name of the website. And it just has all these different charts where things seem to have. There's like a break in all these charts where either the slope dramatically changes, the direction the chart is going changes, or two things that were correlated suddenly become uncorrelated in 1971, 1972. A good example is that real median weekly earners of workers was highly correlated with real GDP per capita up until around the early 1970s. And since then, they've been highly uncorrelated, where GDP per capita has gone up while median earnings for workers have gone up at a much lower rate. So basically, productivity has gone up more than compensation. You have wages share of the economy's total income was flat for 50 years, or flat in a range for 50 years, then broke out of the range to the downside in the early 1970s. Income inequality started to sharply rise where it had been decreasing for 70 years and then suddenly started increasing in the early 70s. So I think that to me, the most clear thing that happened then, I mean, there's a few different things you can make the case happened, but I think the most clear one is, okay, so they got off the gold standard, which means that new money that's entering circulation isn't necessarily linked to any real value, or really it's not, in most cases, linked to real value, and then it gets into the hands of people usually via either government spending or via loans, which means that it's not necessarily distributed in an equitable way, and it's not all trickling down into the average person's wages, which I think is probably the root of a lot of issues that we have. And then it also, you could argue, leads to more financialization of the economy as well. I don't know if I'm going to say it's the biggest mistake the U.S. has made, because that's a pretty high bar. And I, American, I love the United States, but we've made some big mistakes. But I think that the way that it's the trajectory that we're currently on, because not only did we go off the gold standard, but then went on this path of taking on inordinate amounts of debt without any plan to slow down. Yeah, I think that when historians look back in 500 years, they may look at it as the beginning of some really tough times. Not to sound like too much of a doomer, but I like to think, okay, if I was looking back in the year 2500, assuming humans exist, what do I think about the current era in the United States history? And my background was, I studied econ with a focus on economic history, so that's just how I like to think about things. But looking back, what will they look at now? And they might look at, okay, this was the era in economic history where the United States dollar was debased and was losing its value. I will point out, though, that I think people overdo Rome comparisons, but if you do a comparison to Rome, they lasted for a few hundred years after they debased their currency. So it doesn't mean that it's all over, but it could mean that some tough times are coming.
Nice, dude. So we might have a few hundred years, still a massive L to leave. Those guys just did copy and paste. So little salty about that, but it is what it is. Let's see what happens. I think that's definitely a good take that you had. I saw you retweet a post about ChatGPT sending crypto payments. Machines paying other machines is kind of a wild concept. How do you see the intersection of AI and crypto developing in the future?
Yeah, so my theory, and maybe this is partially hopium, given that it's a great use case for crypto and ties us to probably the most prominent tech narrative of the year. But if you're able to use AI to make a fully autonomous agent, either one that exists online or, down the road, imagine you have, for example, some sort of autonomous drone delivery thing that is put out there and then isn't actually owned by anyone. How's that thing going to transact? Right? It's not going to have a bank account. It can't. Crypto is a solution that's available today for it to transact. Right? You can't have a machine open a bank account. There's no just legal way of that happening, and it's also going to be way less efficient than the machine making agreements through smart contracts, making and executing smart contracts with other AI through a combination of oracles and blockchain. Doesn't mean it's the only solution. I posted something about it being like the only solution, and this very, very smart guy I'm friends with, who's he goes by PC Crypto. I don't think he's listening, but very smart guy. You should check him out. He's got a PhD in math. He pointed out, he's like, well, they could also transact by exchanging units of energy. I was like, okay, so there are other solutions than just crypto. Or he said they could transact by exchanging units of energy or using computation power as currency. So there are other options, but crypto is available now, right? And there's a large ecosystem that's already being built and tooling that's already being built. So to me, it seems like the obvious option for if you were building an autonomous machine and you wanted it to transact with either people or other autonomous agents, crypto would be the solution that you'd probably choose.
Yeah, I mean, units of energy and computation power are a little bit over my pay grade and understanding, to be honest with you, but that sounds like an absolute Chad. So I'm glad that he's in the crypto space. And also, another tweet of yours, you tweeted that real adoption will occur after the next Bitcoin halving cycle if it plays out, the way we are expecting. What makes you think we're close to mainstream adoption? And is TradFi kind of aping in a big signal for you, like all of them requesting Bitcoin ETFs and the likelihood that those will get approved?
Yeah, so I do think that's a big signal where, and I'll clarify, it's not that I think we're going to go on this, I mean, we could. I don't think we're going to go on this multi-decade super cycle necessarily, but I think that the next halving, my unpopular opinion, is that will be the end of Bitcoin halvings driving the cycle. Because when you have a market that's largely driven by, for example, emissions, and then miners needing to either sell or not, and then the amount of emissions that miners have to sell, then the halving is going to be the most important event, or be such a major event that it's going to drive the cycle. But when you have, for example, huge ETF flows, when you have, I think Bitcoin dominance will be far lower in the future than it's been historically, and you have other layer ones, you have other applications, you have companies that are actually using tokens, even if it's just for things like gambling and games and stuff, then you're going to have a lot of inflows and outflows that are completely uncorrelated to whether it's the Bitcoin halving or not. Maybe it'll still have relevance to the price of, I mean, it will still have to have some relevance to the price of Bitcoin itself, but I think it'll just be one event or catalyst among many. So it doesn't mean necessarily I think that will be real adoption will be happening, will be up only. It's more that I think that after the next halving, we'll have enough adoption and enough other sources of inflows and outflows that it's going to be, the market's going to be dependent on other things. And potentially with the ETFs, it'll also be much more correlated with the rest of the economy.
Yeah, definitely. Part of me became turbo bullish when Larry Fink called Bitcoin digital gold. I mean, he did call it a scam a few years ago, but we don't really talk about that, especially why he was accumulating. They called it a scam, but we really don't talk about that. But yeah, that's just another conversation. But yeah, definitely good take there. And, you also mentioned bridges. So I do kind of want to ask you, about this as well. Yeah, bridges have led to a lot of exploits. Like 4 out of 5 of the largest crypto exploits have involved bridges. Hashflow is a bridgeless DEX. How far are we from not needing bridges, and why does the industry persist in using tools that have had a suspect past?
Well, I think they exist, or they persist in using them because you can, it's easy to incentivize people and grab some share of fees or user activity by using them. So, I mean, for example, if you build a DEX on Avalanche and there's no DEXs on Avalanche right now, imagine a world where there was no bridge. And so you imagine you build a DEX on Avalanche and there's no DEXs that have wrapped ETH on Avalanche. You can build a liquidity pool where people can pool wrapped ETH and wrapped AVAX, and just, okay, that's a very clear market. There's going to be demand for that because there's going to be people who want to enter a pool that's 50-50 ETH and AVAX. And so that's why we continue to use bridges, simply because there's an opportunity there if no one is. Not to mention the fact that layer twos, of course, necessarily need a bridge unless they're only going to have assets that are native to the layer 2. I think that's partially a function, though, of so much of the on-chain activity right now existing. How do I say it? Like, it's front and center, where a lot of people are still, they're actually going to the DEX. They're approving single transactions in their wallet, whereas I think some point down the road, a lot of those things will be abstracted away. And yes, you'll have to approve transactions, but you might be approving something that this that's more user-friendly front end gave to you, and it's triggering dozens or hundreds of things to happen potentially on multiple chains, right? And that could incorporate cross-chain messaging technology, could incorporate oracles, but basically a lot of those trade-offs of decentralization and security and everything, the developers have decided in the back end, and then all you know as a user will be that the application works. And so I think the fact that people are still having to bridge assets around themselves and say, okay, I'm bridging my ETH over to Phantom and I'm going to use it for this, I think that's largely a function of how early the industry is. I tend to think we'll move towards more use of native assets on other chains. I put out the question, actually, I haven't gotten a convincing answer from people, is, for example, why would you need to have ETH on another layer one? And if anyone listening has an idea why, I'd be interested to hear, because I use things like that because I'm a heavy yield farmer, but I can't think of any real reason why for a legitimate real world use you would need to have, for example, ETH on another chain. I can imagine lots of uses for speculation where you want to have a wrapped or synthetic version of ETH to bet on the price, but that's a different situation. But why you would actually need to hold your ETH on another chain, especially when you could, if it's a matter of transaction fees, you could move it to roll up.
Yeah, it's kind of like Inception, man. Got to go deeper, more layers. More wrapped Ethereum on those layers, just in case. Us speculative folks out here, we got to be ready to move. Got to keep some powder dry. Definitely looking forward to a Bridges future as well. I also want to kind of ask you. You're an absolute Chad when it comes to information. There's a lot of misinformation and scams out there. What resources do you consume? Podcasts, newsletters, other social media accounts, even maybe that we can follow that inform you about what's actually happening in the space. If there's anybody that we should know and check out besides yourself, obviously, that please share.
Oh, thank you. Yeah, I mean, I won't show myself. My good friend Rec Diomedes is a pretty large account. He has a daily newsletter called the Daily Degen, which I read almost every single day. That's a really good resource. Actually, a funny story about that guy, for anyone who's trying to build a brand or reputation in crypto, is Rex and I became mutuals on Twitter when we each had a couple thousand followers in some point in spring of 2022. I think he had maybe we both had maybe 4,000 or 5,000 followers at the time. We became mutuals and started chatting and sharing each other's things. Now we both have over 50K. So it's cool if you start networking, you can grow together with people and then share each other's things. And you really only need a few people like that to accelerate each other's growth. But that would be one place I would go. Definitely Daily Degen. Great roundup of all sorts of things that are happening. Another one is Revelo Intel, which has both they have a free and paid version. Also started by one of my friends. So yes, I'm going to be biased towards people that I know, but Revelo Intel is another great source, and they've got a pretty solid team, or very solid team, that does due diligence on these different protocols and gives you a rundown of what they're about. And then I use a lot of on-chain analytics resources myself, right? I use DeFi Llama. Also, by the way, they have a great roundup in their Telegram news channel. But yeah, I use DeFi Llama. I use Artemis, and I mean, there's a lot of other tools I use, but those would be the main ones.
Love that.
I'm not a big podcast listener though. I've been trying to get into it, but I'm not a huge podcast listener.
Definitely hear you, man. It's a new space. Still seeing who's got the chops to stick it out in the bear market. It's all cool making crypto podcasts in the bull, but who's here when it's not sexy, right?
Absolutely. Although I will say, I think a lot of the best alpha is listening to podcasts and spaces. The reason being that a lot of them don't necessarily get a ton of listeners, right? So for example, and this is going to be, just a recent example because it was earlier today. I did a space with this project I'm advising, and there was 9 or 10 people listening to it, and they shared some alpha on when their public launch is going to be. It's like, okay, so well, if you were, unlike in traditional markets in crypto, there's projects where you can invest in, and you can listen to an interview with the founders and be one of 10 people to have some information, which actually does give you an edge, right? The market's not totally efficient. And then there's all sorts of examples like that, where if you actually pay attention and listen, you can learn things that aren't priced in.
Yeah, I mean, if you look at what gets engagement, it's not always the alpha, right? Like they're coming from small accounts. They might post something that's got 3 likes, but it's an absolute banger piece of intel. So definitely keep your eyes open for those smaller pages who share quality content. And Patrick, you have been here for a while. You've seen a lot of crypto companies and projects come and go. What has been the biggest mistake you've seen projects make that has cost them their longevity?
Ooh, that's a really good question. Well, just off, kind of just, I guess not really off the top of my head, but one mistake that I've seen projects make is launching multiple tokens, maybe potentially sometimes as a cash grab, or just because they need the cash or liquidity. But I think that's usually a pretty strong sign that the project is going to start to spiral down. And not always the case, because there are reasons why you might have, for example, a token that's used as a currency in the ecosystem versus a governance token. I'm talking about situations where projects have one token for one product and then they launch a second product. And rather than tying it to the original token to increase the value, they launch a new token. And then they launch a third product and launch a third token. And it's all in the same ecosystem. But usually a very bad sign. Another thing is, the brighter something burns, the faster it burns out. So, you sometimes you see these projects like, for example, well, I don't want to pick on them because I actually do think they had some good technology, but look at, for example, the Abracadabra in Frog Nation in late 2021, early 2022. Right? Was there any community or project at the time that was attracting the attention and retail interests that those projects were? I mean, I don't think that's so at all, right? I mean, I think that's part of the reason why people who are making educational content about DeFi like me were able to gain tens of thousands of subscribers. I mean, my parents' neighbor in real life was invested in Wonderland time, right? Got a realtor who has no interest in crypto otherwise. So that was something that was shining really, really bright, but I think has since in a way burnt out. I don't know if their story's over, but it's really been hit really hard and come down really far. I mean, Abracadabra right now, for example, has less total value locked than Libra, last I checked, right? Which is a much newer stablecoin. And so that just shows that, you could say, well, what if instead of going that route, they had been able to burn strongly and steadily and grow, in maybe a more sustainable way than this explosive community. And I guess maybe that just wasn't their personality, but I think that that's usually a sign that, okay, things are starting to top out a bit and they're going to have to come down at some point.
Yeah, man, rubbing some salt in the wounds. Bought that mutant ape at 4 ETH. And, I look back to 2021, 2022, getting offers like 40 ETH. I'm like, what are you doing, dude? You're like, oh, no, we don't know the true value of these assets yet. I don't want to be that guy that sells my 10,000 Bitcoin for 2 pizza. It's like, okay, bro, it's worth 5 ETH now. So, yeah, that's sometimes part of the crypto journey, right? Having complete capitulation of your bags. But, yeah.
Yeah, we've all been there. I mean, I've been there multiple times, right? 2018, I wrote things down over 90%. 2021, the first half of 2021, I got wrecked, and that hurt worse because I bought stuff in mid 2020 and it was way up, was rotating, was moving to. I think what I really got wrecked was I then rotated to the Polkadot ecosystem at some point in the spring of 2021, and I just got hammered in that spring and ended up down. I think down or close to where I had started when I was buying, ETH at a couple $100, and that really, really was a bummer. But then learned my lesson, right? And luckily we had a second half of the bull run that year. But yeah, it's just part of the journey if you're invested in the industry.
Yeah, I'm just going to be taking profits next time for sure. Never financial advice, though, obviously. Another question for you, Patrick. How can people best position themselves to succeed in crypto, regardless of the current stage of any given market cycle? How do you operate in a bear market versus a bull?
So I'll say two different things, because one's going to be completely specific to people who are only interested in investing, and the second is going to be for people who are interested in doing a bit more. If you're only interested in investing, you don't want to make a newsletter, you don't want to make content, you don't want to code, you don't want to work for a project, then the answer is you want to niche down. And can you be one of the world's foremost experts on Bitcoin? I mean, I guess some of you maybe could, but you're going to have to devote yourself full time to that, because there's other people who are. And there's people who have been devoting themselves full time to it for a decade now. But can you become one of the world's foremost experts on, just to pick a random vertical, decentralized science, right? It's a very small sector within crypto. But could you become one of the world's foremost experts on decentralized science? Yeah, there's probably less than 100 people who are actually making it their focus, and not all of them are full-time. So yeah, if you were to spend just a little time every day reading white papers, testing out protocols, in the Discords, talking to people, watching interviews from the team, then probably in a matter of months you would be in the top tier. And then if that sector ever gains traction, then you're going to be super well positioned, and you're already going to have the connections. And this is, of course, you should only do this in a sector that you actually think is going to take off at some point, right? If you don't think decentralized science is ever going to take off, then yeah, don't make it your focus. But if I was investing, that's what I would do. If I was solely investing. If you're interested in doing a little more, then figure out what your skills are, either from current work or other things that you can do or know how to do, and think about how you could apply that in crypto. It doesn't just have to be writing smart contracts and building projects, right? There's successful newsletter businesses. I'm trying to make one myself right now. There's a need for videos. There's a need for people who know how to hire and do HR things, because hiring devs is a huge challenge from what I've heard talking to projects. So yeah, there's whatever your skills are, there's probably a way that you could apply that in crypto. And then that's going to make you more resilient regardless of markets, because you're actually building things. And then when the market recovers at some point again, and there's money flowing into the space, whatever small business consultancy you have is suddenly going to take off.
Definitely, man. Having conviction is super important. I'm all in on crypto. It's either a cardboard sign on a freeway intersection, or we're going to be living in Beverly Hills, no in between. But the next question I have for you also is, as markets mature, volatility becomes less common. How many more turbo bull markets do you think there are left in the crypto industry before things become more calm? How many opportunities do we kind of have to see that, market cap balloon and whatnot, like that volatility? Like, what are your thoughts on that?
Well, fingers crossed, at least one, right? I think we're going to have at least one. And I mean, not to beat around the question, but it comes down to, was 2021 crypto's .com bubble or not? If it wasn't, and I knock on wood, I think that it wasn't, because it was still, we had the stadiums and stuff, but it was still pretty immature. Then my working theory is we get one more bull run like that that's characterized by rampant speculation, and then, sort of similar to my prediction with the halving, then after that it becomes more dependent on real utility. So sort of like tech had the .com bubble, right? And then we've also had a huge tech bull run since the last recession in the United States. That people have made incredible returns, especially if you founded companies during that time. But it's different, right? Because it's driven by the fact that these companies actually have millions of users. So it's not just a sudden 1 year of turbo speculation. It's a long, drawn out decade of growing adoption. So my theory is we have one more bull run, and then at some point in the 2020s, or maybe even a little after, we get that extended bull run of actual mainstream adoption.
Let's hope you're right, man. All I know is the name Sam has definitely like dropped in terms of newborn babies. Like, yeah, I can check 2022, 2023. Any of those crypto degens are not naming their kids Sam anymore, unfortunately. So shout out to SBF for that. You can thank him. The last question we have for you, Patrick, is we appreciate your time. We know it's very valuable. We know that you have to go onboard more people into DeFi and crypto and write more newsletters and create more content. So I want to make sure you can get back to that. What does the rest of 2023 look like for you? Where will your focus be? Maybe what are some predictions even, but yeah, how will you be spending your time these next 6 months?
Yeah, so aside from just building out my content stuff, if you're talking about where in the industry I'm most interested right now, primarily it's going to be 3 sectors at the moment. One is protocols that are leveraging liquid staking. I mentioned before in this chat that I like on-chain stats, and if you look at just the total value locked period in liquid staking, it's gone from being around half the size of DEXs at the start of the year to being $5 billion more than DEXs. I think it's grown from around 8 to 9 billion up to over 20 billion in liquid staking. So that's a huge amount of liquidity that's been unlocked. So I think protocols that make use of that are really interesting. The other one is real world assets. I think it's kind of a cringy term, if I'm being totally frank, but it does accurately describe what it is, right? It's assets that are not on chain, that are tokenized on chain. Just because you're seeing huge numbers of protocols launch with that. I mean, anytime I do a tweet about it, I have dozens of protocols that are launching soon reach out to me. Either they're building a DEX for tokenized real world assets, or sometimes they're building a protocol that lets you buy them with leverage, or they're just tokenizing something that hasn't been tokenized yet. I still think we're probably a while out before that's any, for example, reasonable size of the real estate market. But I think that's just because those markets are so large, you only need a small percentage of them tokenized to be huge in the crypto market. That's something that I'm interested in. And then the third would be synergies between AI and crypto, just because that's such a huge bull market in other areas right now. I think that it's inevitable that it already has started to spill over to crypto, but inevitable that it spills over to crypto.
Yeah, what a time to be alive, man. We're certainly not going to be bored in the future. But look, we appreciate your time. You're an absolute Chad. You shared a lot of alpha here today. I'm glad this space is recorded. We're probably going to be disseminating some clips with some of those alpha bits for Twitter and Instagram and all that. So we appreciate you, Patrick. We have these conversations every Thursday. They're brought to you by Hashflow. They allow us to talk to cool people like Patrick every week. So Patrick, thank you again, sir. Is there any final words you have before we let you go back into the metaverse and crypto world?
I would just say thank you for having me. It's a pleasure. I was already familiar with Hashflow, and so it was an honor to be asked to come on here. My word of advice for people would be, I mean, if you've stuck around for this long, you're probably in it for the long haul, but don't let yourself get bored and completely stop paying attention to crypto markets, even if it's just checking in once a week, once every couple of weeks, because there may come a time in a couple of years if you check out where you really wish you had not.
Well said. Andrew, any words, sir? I see your mic is off.
No, I mean, always a pleasure. Thank you again for coming, and let's get that cycle.
Let's go.
Let's get it. Yeah, no, we've been humbled enough, right? We've been humbled enough by the
Bro, we've learned our lesson. Like, we get it, okay? Like, we'll sell the top next time. I understand. But all right, everyone. Look, we appreciate you guys listening. Enjoy your weekend. It's coming up soon. Patrick, keep being a Chad, keep creating content. And as always, give Patrick a follow for sure. And much love, everyone. We appreciate you.
Thank you.
Peace, everyone.
Peace.